All right, what's up, tycoons? What's up, traders? Super excited for today's video. We're going to take a look at MakerDAO, ticker symbol MKR, break things down on the daily chart, give you guys an update. This is actually a viewer request. I do these viewer requests every week. So if you want to see your token, cryptocurrency in the next video, all you got to do is comment down below. And with that being said, we're going to go ahead and jump straight into it. All right, and break things down on the daily chart for you. The things that we're going to go over, all right, is we're going to explain what these three levels are right here. These are our major Fibonacci retracement levels. We're also going to take a look at the RSI, the relative strength index, and go over how you can use these two things together to really help understand some of the price action and, not be caught by any surprises. So make sure to smash the like button, subscribe to the channel if you guys are new. And we're going to jump straight into it. So the first thing we're going to cover are our three major Fibonacci retracement levels. Those are going to be the 61.8, 50%, and 38.2% level. The reason you use these is nothing moves in a straight line down or in a straight line up. Rather, you get a move down retracement, continuation of the trend, or a move up retracement, continuation of the trend. Obviously, this is how you're going to spot trend continuation. And we can see that, we've been doing that and respecting these levels on MakerDAO, right? We came up here, we retraced, and then we continue that trend headed lower. And then we retraced, continued lower, retraced, continued lower, all right? And so what we're currently doing is we're actually at our major retracement levels that I gave you guys in the last video. So we'll break down some of these current levels, but before we do that, we need to start taking a look at our RSI so you guys can understand how we can use that to spot potential entries as well as exits. So if you notice, there's a series of circles on the chart. These are what's going to be known as lower lows, right? So we have a low here, and then a lower low, right? So obviously the token's heading in a downtrend, but if you look at your RSI, this is measuring the relative strength of a token at its given price, and you can see we actually have a low and then a higher low. So we're actually increasing and building relative strength as the token is heading lower. This is a term known as bullish divergence, and you may see some bullish activity afterwards as a result. And sure enough, you do get some. And then over here, what do? We repeat the same process. We put in a low and then a lower low, right? So we continue to head lower and then we get a bullish divergence and we come up to our major retracement levels and start finding resistance, okay? So, these are going to be when you're using your Fibonacci retracement levels and they're above and their resistance. Okay, you want to protect your trade around these areas because, unless we consolidate and break through these levels, then most likely we're going to end up heading back lower and rejecting those levels. So we talked about trend continuation earlier, right, to the upside or to the downside, but you can use these three levels to actually spot reversals, right? So if you move down, retrace, consolidate, and then break through those levels, you can spot a potential upside reversal. Okay, which is currently what we're doing right now, right? We're moving down, we retrace, we're consolidating, right? And if we do break out past those levels, we could end up getting a reversal and retesting some of our previous highs or potentially even creating higher highs. Now, as you can see, that bullish divergence trend line actually was well respected many times, right? So here's our initial low and then higher low on the relative strength index. And you can see we bounce off that RSI again many, many times in the future, right? And at certain points, we're actually creating, low, lower low, then a lower low here, as well as a lower low here. Right. And so this was our initial low and then lower low, right? You can see that we bounce off of the RSI trend line here, but we didn't create a lower low. So what we're looking for is the lower lows with the higher lows on the relative strength index. Once we put in a new low right here, you can see we end up bouncing off of that bullish divergence trend line and we get a nice move back up to those major retracement levels, ultimately before continuing that downtrend, okay, and making a new lower low over here and then bouncing off of those RSI bullish divergence trend line again. And what did we do? We moved up and we're at our major retracement levels. So now that we've broken that down and you guys kind of understand the concepts, what we're going to do is actually go in here, zoom in. All right, we're going to zoom in a little bit so you guys can see the levels a little bit better. All right, and really just get a better picture. And what I want to highlight to you guys now is going to be the opposite of bullish divergence. We actually have a little bit of a bearish divergence. So take a look how we have a high, right? We have a higher high, and we're trying to make a higher high right now. We're actually, about to test some of our previous highs currently at the time of this recording. So, but anyways, clearly the token's in an uptrend, right? It's heading higher in price. If we look at our RSI, we actually have a high, then a lower high, then a lower high again. So we are building some bearish divergence on MakerDAO. Now, what's going to be important is we're going to see if does the RSI reject this level, and is this going to be a resistance area and bring the price of the token back down, or are we going to be able to break out past this trend line? And if we do, we want to see it hold that trend line now at support rather than resistance and trade above that trend line, right? Even if it moves sideways, ultimately we want to see it stay above. And the reason being is because if we look above and then fail, that's actually going to be bearish, right? So if we break out and get a false breakout and fail, that's going to be a look above and fail. And what that means is that buyers were given the opportunity on the breakout to continue the rally and push things up higher and continue to trend upwards. But rather, when presented the opportunity on the breakout, they failed and bears were still in control. So keep a close eye on this bearish divergence trend line. It could push things back lower, but we could end up getting a breakout. Right, that's what you're going to want to see if you're bullish. Now, when it comes to the major resistance levels, our retracement levels up here, we're at 763, 840, and 918. We're currently above 763, and we did a good job on today's candle of testing that level as support. So you want to stay above 763, and then you want to break out past 840 and 918 as well. If we can flip 918 from resistance to support, then we have the potential for getting that reversal that I mentioned earlier. But anything below 763, we're going to be bearish, okay? And we could come down and retest some of our previous levels around 654, all right? Now, our big major support level below 654 is right here, right around 515. As you can see, we ended up, finding some support right around that area and really starting our rally in the beginning of 2023. Most cryptocurrency, a lot of altcoins and Bitcoin have been rallying very hard since the beginning of the year. And we're going to see if that can continue or if this is just one big healthy retracement that potentially could just continue the downtrend. So, hopefully you enjoyed this video and learned something new. If you did, smash that like button and subscribe to the channel. I'm out.